Hello traders. Today is the 16th of December 2010, and this video is about how to trade during the consolidation period, or the quiet period, or the low volatility period, or the balanced market. Because you will notice also that some of my fellow traders will talk about a market profile. Okay, they will talk about a balanced market. When you hear traders talking about a balanced market, balance means that equal influence of the bear and equal influence of the bull. So the influence of the bear and the bull uh, is equal. Okay, that's what we call a balanced market. A balanced market is a time also when the price is not trending. So you will hear sometime my fellow traders will be talking about imbalanced market. When the market is imbalanced, it means that the market is trending. So you will see also, you will hear sometime or read about it, people talking about the market is not imbalanced after being in a balanced position. Well, the market in a balanced position means that the market is consolidating. It's just a fancy word to describe a quiet period, a low volatility period, a pause period according to the market pattern, trend, pause, trend. Okay, so if you want to know more about the market profile, you can go on the YouTube or Google, and then you will see all the information about the market pattern, a balanced market, imbalanced market. So imbalanced market is a trending market, a balanced market is a pause period, a consolidation period. Now, why am I doing this video? Because I have noticed that many new traders and many traders, even some experienced traders, they get caught in this kind of problem because the market will be trending. Everybody know that the trend is going up, and someday they will come into the market and they will use a strategy that is relating to a trading method. Okay, and they will give back all their profit. So one day the market went up big time, people make like a 200 pips. Okay, and another day the market was consolidating and people are not aware of it, and they will get into trouble. So they will come here because they know the market is going up, where I'm moving my cursor. They will come here and buy here only to see the price, buy here only to see the price going down. Okay, and then they will close their trade here. Okay, they will close their trade here, or decided to sell here because they see that, oh, now it's not going up. Okay, it's going down today, so they will sell here only to see the price going up again, and then they will say, okay, it's going up now, and they will buy again here and the price will go down, and these people will be losing money because all the money that they have made during the trending period, they will give it back in the consolidation period because they failed to notice that the market is not trending today. Okay, three things the market will always do: the market will trend in the upside, the market will trend to the downside, but the market also will have a time of quiet, the market will rest. That's what we call a consolidation period. So when you come to the market, how do you recognize a consolidation period? Okay, because it usually happens, you'll see the market will go up for 1 or 2 or 3 days, usually for 3 days in a row, and then the fourth days is a consolidation, and then again you see uptrend. Okay, that's the market pattern: trend, pause, trend. Market trend, relax a bit, and then trend again, relax a bit, trend again, relax a bit, and then trend again. That's what's happened. Okay, some consolidation period may last up to 6 months or more. Okay, so you will see sometime on the daily chart or even on the weekly chart when the market will be consolidating for some time. Some stock also will be consolidating most of the time. Okay, so you have to understand the personality of the stock or the currency that you are trading. Some of the currency, some of the stock will be consolidating most of the time. So it's the best time to make a lot of money, easy money, if you can recognize that this market is consolidating. That's where the bank also enjoy this period because it's a quiet period. There's not too much volatility in the market, and they will accumulate, okay, from here to the downside. They will sell it here and buy it here. They will sell it again here. They will buy it here. And so you buy it here, you take profit here. You sell it here, you take profit here. You buy it here, you take profit here. That's what I call ping pong. Okay. So this is the time to make easy money, but a lot of traders will get into trouble. Also, when you are dealing with a consolidating period, sometimes traders get into trouble because they think that the price will go, like the price going down like this. They'll say, okay, you want to buy here, okay? They will say, okay, it's going up. They will come out here and quickly here they will decide to buy, but the price and time will go up a little bit, go a little bit further up to test this zone to see whether there are buyers there. They will test it. So sometimes the price will go above the resistance level, okay? Go a little bit above to test whether there are buyers here, okay? And then only to come back in, okay? As you have seen for this a crazy currency pair, the USD yen is now consolidating a little bit between the level 8300, which is the psychological level of the USD yen as I'm speaking today on the 16th of December 2010, is consolidating between the 8300 and the 8440, okay? So but we notice also at one point it went below the 8300, which is a psychological level, will dip a little bit below just to test whether there are sellers there, only to come back again into the box, so to speak, okay? So the consolidation period is the time when the price squeezes between one resistance level and one support level. This is the resistance level here, okay, and this is the support level here, and the price is bumping between the two levels until one of the group will take over. Either the bull will take over, which means the price will break this resistance level and then retest it and find the support, and then we have a new uptrend, okay? Sometimes the price will go above it to look for a support, only to fail to find a support and come back into the box and come into this level here, and sometimes you break below this support level only to fail to find a resistance and then come back into the box again, and then the same thing continue. So don't think that this is a level, this is a zone, okay? And sometimes the price will come above that level, and sometimes people will lose money because they buy here and the price will continue a little bit up, only to come back down, okay? So this is about the consolidation period, the low volatility period. Usually, how do you detect that? You detect that by seeing the price squeeze between one resistance level and one support level, a clear defined support zone and a clear defined resistance zone, okay? This is the resistance zone and this is support zone. What you can pay attention to when you are using the moving averages, like moving average 20, exponential moving average 20, exponential moving average 50, exponential moving average whatever you are using, okay, whichever you are using. Usually you will see the exponential moving average 20 and the exponential moving average 50 will come very close, okay? They will become horizontal. Moving averages are very good sometimes to detect the consolidation period. They will come all together, okay, and they will be going horizontal, okay? They come together, they're not crossing, they touch each other, but they are not crossing, they are all horizontal. That's what we call a balance zone. You will see the Bollinger Band also being squeezed, okay, in size, not open, okay. That's also a volatility period, a low volatility period, okay. That's how you will detect also a quiet zone, okay. And the price itself will show you clearly what is going on, as you see. But the most important thing to remember, you must see the price touch this resistance zone at least twice, okay? So it touch it here, and also the support level must be touched at least twice. Then you know that it's established. No, not only one, at least two. Some people will say three. I'll say two. Two is enough. As soon as you see two, it touch it here, touch it, it confirm. You see this resistance level here, it touch it here, went down, come back again, touch it here, went down. This level here has validated this zone here. Same thing when it touch this here and touch it again here, this level here has validated this one here, okay? This is how you will know about the consolidation zone. One thing I need to mention to you, the market will do only three things. That's what we call the market pattern. The market will trend, and then the market will go horizontal. The market will trend to the upside, which means rising uptrend, okay, or the market will go horizontal, which we call consolidation, balance zone, quiet period, low volatility period, or pause period, and the market will trend down, so up, down, horizontal. So you must always, when you come into the market, recognize which market are you dealing with, okay? So the first question you must ask, which market are we in? Are we in a consolidation market? Are we in a trending market or not, okay? If you are in an uptrend, okay, which means the price is trending to the upside, you apply the uptrend rules, okay? If you are in a horizontal, which is consolidation period, you apply the consolidation method. If you are in a downtrend, you apply a downtrend trading strategy. Okay, so how do we trade this? We will sell here at the defined resistance zone after we have a two level being confirmed. We know that the zone is established. So in this case, once we see this level here and this level established on the upper side, and this level here and this level also established, we know that we're in a consolidation zone. So we will be looking for opportunity to sell here, okay, take profit here, and look for opportunity to buy here, take profit here, because the zone is now established until we see the price display higher lows or lower highs. Then we know that the bear are taking over, and then we see the price breaking either this resistance zone or break this level here. Nobody will know which direction the price will finally go until the price wait for the price to break out and to validate. I did a video when I show you how to detect clearly a fake breakout, a fake breakdown. As I told you before, how do we detect a fake breakout? The fake breakout is to the upside, is when we see increase in volume and the resistance level is broken, but the bullish momentum is decreasing. Okay, so volume is increasing, resistance level is broken, but the bullish momentum is decreasing. That's a fake breakout. Same thing for the fake breakdown or breakout to the downside. Okay, is when we have increase in volume, a support level is broken, but the bearish momentum is decreasing. That's a fake one also. Okay, so we sell at the resistance level during the consolidation period, the defined resistance zone. We sell there, we take profit at the support zone, and we buy at the support zone and we take profit there. This is about the consolidation period. Remember, the market does not always trend. Remember, the market does not always trend. You will see very often, especially on the daily chart, the market will trend for 3 days, and then the fourth day will be a consolidation period day. Okay, then that's why usually you see sometimes people will say inside day. Okay, have you ever heard about the inside day? A very powerful trading method for inside day. This is a consolidation period in the uptrend, inside day, and then a breakout above the inside day, the high of the inside day, and the uptrend continue again, the inside day in the downtrend, and then they break down below the low of the inside day in the downtrend. That's what we call the consolidation trading method, when the trend is about to resume again. So this is about how you will trade the consolidation period, how you can recognize it, and also to remember that the market does not always trend. Right now, the USD yen currency pair is consolidating between the 8300 and the 8440. Okay, so pay attention always to the market first. Which market are we in? Is it trending? If it's trending, the TSTW24 will let you know. You know straight away that it's trending by all means. And the first thing, is it trending? Yes. How strong is the trend? This is the second question many people don't ask. They see it's trending, okay, but they don't know how strong it is. And then they will buy, people will buy on top of the fifth wave, and they lose money because they are late buyers, and they buy at the wrong time, they buy at the wrong place. This is about to recognize clearly the consolidation period and the consolidation market. The market will trend to the upside, the market will trend to the downside, but there are times when the market will go horizontal. This is about how you can trade the consolidation period like professional trader. I hope you enjoyed this video, that you will put into practice in order to claim the market consistently. We are the TSTW24 traders. Until the next time, enjoy yourself and be very happy. Thank you.